Hello, everyone, and welcome to Adonis Trade Academy. This is Kings FX, and I'm teaching you today. All right. If you're on this video, it means that you've been following our courses for a while now, and this video is mainly to teach you what you should look out for in order to take a particular trade, in order to go either short or long in the market. What are we looking out for? What are those things that we're looking out for? Are you a retail trader? You're waiting to see support resistance before you jump in. Are you an institutional trader? You're waiting to see a very good setup for you to enter. This is a trade that will help enlighten you on that particular thing. Okay, so what are we looking out for? This is a daily time frame, and we are trying to get the overview of the market from a daily time frame. Okay, and it's obvious that this market is on a bearish trend. Okay, market is on a bearish trend. Nonetheless, if we look at the general overview of the market, we can tell that this market is consolidating. All right, the market is consolidating. Okay, so we can call this accumulation stage of the market. Why? Because price was moving bullish and now it has started to consolidate, is accumulating. So probably it will shoot out of this zone and continue going high, or it can go down to the support and continue going below. So that is not what we are considering. We are trying to see a very good setup that will enable us to either place a buy or a sell in the market. So these are the things we are watching out for. Meanwhile, there are things that I would like us to really consider in the market. Let's forget where we are. Let's check out the previous low that we had in the market. And if we check out this particular zone in the market, we'll realize that something happened. And what was that happened? Market had a very large volume that pushed the price very, very high, so which gave us a very good order block. I believe from the previous videos we have understood the concept of order block. There are zones in the market where institutions pile up their orders and take the price either higher or price either lower. And to know how valid an order block is, it must also there are different criteria to know how valid an order block is. If an order block is able to break structure, it's very valid. In an order block, if there is a lot of volume like you have here, price just pushed high comfortably, it means it's an order block. All right, it's a valid order block. So why did I say that? This is a market that's been going low, so you have the lower high, the lower low, the lower high, the lower lows and lower highs and all of that. So this was the previous lower high that we had, and this market broke the lower high, which means that this other block that broke this lower high is a valid order block. Aside that, it had a very large volume that pushed it very much high. So now price is expected to come and pump into this order block before pushing high again. So that is what we are expecting. All right, so that's the first thing I need us to understand. This is our daily order block below there. So let's get back to business. So this is where we are right now in the business, and we can tell that this market has been consolidating. All right, on this particular zone, market has been consolidating. So is either price wants to move high or still push low, or because it took our liquidity on the top. But what we know is that this market is on a downtrend, so we're looking out for sell orders, a little buy order thereabout. So let's go to a lower time frame, let's say 4-hour time frame, and we can see what is happening in this market. Over here also there are a little thing to consider in this particular market. All right, so one thing to consider is that there are a lot of imbalance in this particular market. You must watch out for imbalance. This zone was the first zone of imbalance that was later balanced. This particular zone, these are zones where candles just moved without balancing itself, and market has already mitigated that particular zone, which means that taking out the level of imbalance here, which means there are still imbalances just below this zone, and there is also an order block within this particular zone. Let's see if we can get it from a daily time frame. how much of that is an order block. Okay, remember what an order block is: the last candle before the bullish or the bearish momentum. Okay, sorry, that's not what I wanted. So you have this as your order block. So we're going to highlight that. Why am I getting this? We're going to highlight that particular zone, and we can call it our daily order block. All right, so the reason why this order block is valid, I will always say, I think I'll pick purple, right? Okay, let's pick purple on that. Good. Now the reason why this is a valid order block is why, because it took out this lower high here. Market took out this lower high here. That makes it a valid order block. Aside that, there was a large volume. You can see like price pushed high so much that it created an imbalance within that particular zone. All right, so let's go back to our 4-hour time frame. We've already noted our daily order block. Okay, so now there are things to really consider in this market. Like we said, that this fair value gap has been mitigated, so we're going to look out for other gaps that have not been mitigated. So we have this particular one here that was just mitigated right now. All right, and the next one we have is around here. This is a fair value gap around here, and we can use this as our order block. Now, nonetheless, remember what we're trying to consider in this particular market is what to do. What are we meant to do in this um, particular market? And we have seen something, a little thing that just happened right now, that price touched our FV, fair value gap, and there was a price rejection, and um, that price rejection broke our structure here to the upside. Okay, remember what we have. This was market has been giving us this is a lower high, a lower low, lower high, lower low, and if market will be very valid to continue the downtrend, it will give us lower low, lower high. Okay, so market will continue moving in that direction. But what happened? It broke out of our lower high, which means that our market wants to fill up some gaps here before pushing down. Okay, because it has broken into the structure on this particular zone. Okay, so what are we looking out for? We could see if there are buy orders that we can enter to mitigate these fair value gaps that are positioned all over in this particular zone. But what we are expecting is that price will bounce in here. What we are expecting is that price will bounce in here, and this is it, and push high. Okay, so that is what we are expecting. So it's either you are waiting for market to jump into that particular zone. Why? Because this is your order block that is meant to push the price back up. Remember, market is bull and bearish, but we can take the little order we have and enter the market and make money in the market. Else, you just have to wait for it to jump into this order block and you move on. All right, so that is firstly, that is how to trade. So let's check out what we have here also. Remember what I said? I said this is a fair value gap. Market has mitigated that gap, and it could probably push high a little bit. So let's go a little bit lower, maybe 15 minutes, maybe 1 hour. Okay, so from this particular, let's go to 1 hour so that we reduce the busyness of the chart. All right, so we have seen something here that on this particular zone there is fair value gap around here. We could use this order block as our take profit zone. Also, we could still use this one as our take profit zone, but notwithstanding, uh, even if we are going high in the market, going long in the market, this is what we are considering. So secondly, even if we miss it, let's try and see something we could trade. um, we have an order block here. Okay, at this particular zone. All right. So remember what I said, that this market has taken out this lower high at this particular zone. So it's either we wait for it to drop, then we go high with it. But we may not be so certain, because what we are waiting for is this big move. We're waiting for this big move here. So we're just trying to see if we can, milk the market and make sure our risk is very, very low. Reduce the risk. So if we are going long here, we are going to consider how many pips stop loss. This is a 9 pip stop loss. Is okay for. Okay, so let's see if that will play out. Okay, so all right. Okay, I think that was it. Okay, so price is still pushing. Let's see if we are going to take our profit there. And you can also be regulating your stop loss to break even, just to save yourself the stress. Remember, what we are looking out for is that big move. All right, so we can just play it sharp. Okay, we have already taken profit there. All right, so that is the first take profit, and that's 74 pips profit. Our stop loss was just 9 pips. You see, it's very, very easy to run this kind of setup. It is very, very, very easy. Okay, and remember, I didn't teach how you can enter multiple positions. That's not what I wanted us to really understand now, but nonetheless, this is the first thing you must consider. Take profits. You can move your stop loss to break even, or something, like if you don't have the strength to wait. Okay, so that is the first one, and we're trying to remember, we're waiting for our big move to really occur there. And one other thing we are considering right now in the market is the fact that the reaction of these candles at these particular zones that we have mapped out is the main thing we are trying to consider. All right, remember, our market is bullish, but it must just obey price action. All right, so let's go to 4 hour so that it will be a little bit faster. Remember, we are waiting for our big move. We are looking out for our mighty move, okay, in the market, and we've made 78 pip with ease. All right, so I think there are a lot of signals that we are seeing here in this market. Okay, so there are a lot of signals here. I can see them. So it's just about making sure that the price making sure that you don't miss the market at any point in time. So let's say this is happening. Remember when I'm done, I'm going to explain the concept once again and again. Now, secondly, this market has broken the structure to the downside, which means structure has been broken to the downside. We'll still keep our big move waiting while we take trades. Now, if you understand, the first concept that we did in our training is this market structure. How to know whether a structure is broken is if you understand the concept of lower low, lower high. Once it's broken, you know that structure is about to change. So to know or to confirm that this particular order block or this particular zone is a valid retracement zone, it will break the previous low. All right, it will break the previous higher low. Okay, this is a higher low, higher high, higher low, higher high. So it's not meant to break this higher low. Once the higher low is broken, you automatically know that market is on a bearish um, trend. Okay, so we are going to map out our order block within this particular zone. If it is within if it's tradable, we can go for it. If it is not, uh, as far as we have little to risk, we are okay with it. So we're going to short this market. Let's see how many pips we can risk for that. Okay, so how many pips can we risk? 18 pips. 18 pips is much. Let's go down to see if we can adjust it. 15 minutes. Okay, so 18 pips is too much. We are going to adjust this particular trade right now. So adjusting it is from here to here, so that we don't risk so much in this market. Any market that offers you high risk, you just let it go. All right, so okay, now it's 11 pips adjusted. Good. So let's go back to our 4-hour time frame to see if it will work out. At least treat something that you can let go. So let's see if that will trigger. Good, it triggered. Okay, it triggered. And how many pips? These are 118 pips. Okay, we're in a hurry. Sorry, please make sure that it's above your, sorry, that make sure it's above your previous high a little bit there. Okay, good, so that you are safer. Okay, in case you are entering that kind of trade. All right, so market is still moving. This particular market is taking time, but it's moving. All right, so remember, we still have our big move that we're expecting over here. And how many pips stop loss? 35 pips stop loss is too much, so we are still going to consider again. Once price gets into that zone, we will know how to run it. Okay, so let's see what's happening. This market is taking a lot of time. Okay, good. So we've made that. That should be 118 pips after how many days? All right, so we just won 2 trades right now. Then remember, this is our big move. This is that move we are expecting on our daily order block. All right, the daily order block. So it's good not to be too greedy in with the market. All right, it's very good not to be greedy. This is 37 pips stop loss, which is too much. um Over here, remember, because what we're expecting is this big move. So another thing to consider, remember I told you it's not good to be greedy in the market. So you're going to take the resistance zones over here. We can just go over to the previous high. Good, that should be 106 pips. So now the point is, this is the move we've been expecting for a long time. This is the very move we are expecting for a long time. So what am I watching out for before I can enter this particular trade? Let's go over to a lower time frame, 15 minutes, I guess. Now if you look at this particular market, you realize our market is on a downtrend. So you have the lower high, the lower low, lower high, lower low, lower high, and lower lows. So we're trying to see sorry about that, we're trying to see the reaction of candles within that particular zone. Okay, so right now price is rejecting at that particular place, and we are still watching to see. Good. Now, remember what I told you in the past, that if a reversal is valid, first of all, what will happen? Structure must be broken. Structure must be broken. And when structure is broken, the best you can do, please, let's go to 1 hour and check. Good. Once structure is broken, okay, as you can see, structure broke here, also broke out of this zone, which means this reversal is a valid reversal. All right, remember our trade was to be triggered there, but our stop loss is too much and we can't take that much risk. So we're going to mark out a particular our zone. We're going to mark out our order block within this zone from here to here. Okay, so let's check out lower time frames to see if it is nice, so that we don't miss this trade at all. We can't afford to miss any trade at all. So what we will do is adjust this particular trade from here, then can run it at 13 pips. Okay, so just adjust it a little bit. Remember, this is our big move. This is a 93 pip game. So we're waiting for price to come back and trigger our zone over here. Wait, sorry, let's push it up a little bit to this other block here. So let's try and play it out. Okay, price has been breaking structures. All right, so that is the move we are expecting. All right, so price just triggered over there. This is just a 14 pip stop loss. Price just triggered it and it's pushing. All right, this is a 92 pips. I hope it gives us what we are looking for. All right, so let's be fast about that. Good. So this is what we are looking out for. Thank you. So sorry for that interruption. I had a call. So I think we understand the concept of what we are talking about. So the point there I want you to understand is when a market is about reversing, or when you are predicting that market should reverse or continue, what you are watching out for is the reaction of candles around those particular zones. All right, so that is what you are expecting in the market. Example, from where we are right now, let's do a little example from where we are right now. Okay, let me go to a higher time frame to check the reaction from where we are right now. Let's try to see. Okay, good. So right now, the first thing, like I told you before, first thing to consider is the structure break. If the structure broke out, then we can tell what we want to do in the market. Even if you miss it, at least it is safer to trade like that. All right, so this market broke out of this particular zone. All right, it broke out of this zone and it has an order block situated around here. Okay, so it has an order block situated around here. So what we are looking out for is if market would push up to that particular zone, it should push down from there. If you miss it, then you just take it like you have already missed it. You mustn't gain everything in the market. All right, so remember stop loss should be a little bit above that zone. So it should be a little bit above that zone. So if I should play it out to see if we can get that, even if you miss it, just take it like you have missed it, and that will be that. All right, seems like we have missed this particular trade. So first of all, you've already understood the concept. First of all, it must break your structure to the downside or to the upside. Then you must locate another block that is close to it and enter the market. And by so doing, I'm sure that you should be able to make money out of the market. Practice this. Um, Show it to me on my DM. You can subscribe. Uh, and we can see what will go from there. Thank you for watching. This is King's FX from Adonis Trade Academy.